So, very good morning, everyone. So, today in this lecture, we are going to have a discussion on one very important aspect called as types of capital assets for the purposes of the chapter capital gains. As we already learned in the previous classes, the depth of this chapter capital gains, and furthermore, we are now going to analyze what are the different types of capital assets, because in the basic lecture also, the first two lectures, we understood that there are two important conditions that should be satisfied in order to attract the concept of capital gains. Number one, there should be a capital asset. Second one, there should be a transfer. How many conditions have to be satisfied? Two conditions must be cumulatively satisfied in order to attract taxation on the capital gains. So, in this regard, we are having four important sections which we need to consider to understand the concept of capital asset. You can see on the screen here, you can see here also. So, the capital assets types, section 2, class 42A defines what is a short-term capital asset. Section 2, class 42B defines what is short-term capital gain. Section 2, class 29AA defines what is a long-term capital asset. Section 2, class 29B defines what is a long-term capital gain. So, short-term capital asset, short-term capital gain, long-term capital asset, long-term capital gain. These are the four definitions which we need to read. This lecture will be a simple lecture only, hardly max of 45 minutes. Once this is completed, the next lecture will come. That will be very big because we are going to discuss about the concept of transfer under the capital gains. In that, we are going to discuss not about what is a transfer. What is a transfer will be discussed in this lecture only. What is not a transfer, from the exam's point of view, you are having totally 12 different kinds of situations where transfer will not get attracted. Sir, first thing you need to understand certain things. Income tax is voluminous, but what institute has done is all the points inside the income tax act, they did not keep you for the exam. Say for example, section 49 is there. 49 is a 3.5 pages bare act. In the examinations, all are not applicable. 49.1, 49.2, 49.4, 49.5, these are applicable. Remaining they did not apply for the exam. So, as and when I'm talking about CA final only, I'm talking about CA final syllabus. So, they did not apply everything for examination. They applied decent amount where there is lot of practical relevance. Those they kept for the exam. Remaining they did not. Understood the point clearly? So, therefore, need not worry. I will go in a proper sequencing. After which section what should come. Each and every detail I will first tell, and then only we are going to begin. Clear? Okay, see here, yeah. I have given you the learning objectives. So in this, these things we have already completed. Charging section, meaning of capital asset, negative list, types of capital asset, etc. This keep it on hold. We will discuss in a different place. Now we are going to read types of capital assets and definition of transfer. Next we will read transactions not regarded as transfer. Next, when it will be complete. Next, scheme of computation. Next, full value of consideration. When we come to the full value of consideration concept, linking sections will come. Okay, which one? Linking sections. Section 50C, section 50CA, section 50D. All these things also I will link there itself. So, trust the process. Okay, we are going in a right direction. Linking, whenever I discuss about section 50C, I will link also section number 55, subsection number 2, class AC. Latest amendment have come. Every single minutest of the details we will cover, along with section number 49.1 or section number 49.4, what will get attracted. Every detail we are going to understand. Read with section number 56, subsection 2, class 10. Every single thing, all interlinkages we will do. We will make the best harmonious construction and complete each and every section. Capital gains chapter is a time-taking process. Trust the process, success is assured. Okay. Let's begin. So, we are now going to discuss about the concept of capital assets. Why capital assets are divided into two categories? Simple logic I will tell you. Government of India wanted people to invest in the assets and create wealth. When you sell them, that wealth is not created there, it is stopped. Therefore, what is the problem for the government? Whenever you are making any kind of transfer of your capital asset, it wanted to levy tax on that. Sir, you can tax, but why you are dividing into time periods? Long-term capital asset, short-term capital asset. Why that division? Look, when you are making easy money or when you are making quick money out of buying and selling the assets, Government of India don't want it to happen. Okay, sir, I will give you logical interpretation of why that 12 months concept came, why that 24 months concept came. Every single concept has a logic inside that. Okay, I will give you an example. Normally, generally, what is the financial year number of months in a financial year? How many months will be there? 12 months will be there in a financial year. What Government of India thought process was, in order to make a business profit, a person has to do his business for 12 months. Okay, has to do his business for 12 complete months. He has to put blood and sweat, convert into hard work, and then only he will get that profit. Number one. Number two, a person has to work in employment for full 12 months in order to get an annual salary. House property also same, calculation of annual value on section 22 basis. Clear? Other sources leave, that is a residuary category. Whatever cannot be taken under any of these heads will fall under that particular head. So I'm not going to discuss about that in detail now. So if you observe the first three main heads, salary is a annual salary, house property is a annual value, profits and gains will be calculated per financial year basis. That's why always a previous year will come, because previous year is a financial year having 12 months. Logic of law is very simple. At least to hold a property for 12 months, at least hold a property for 12 months and make a gain. Then I will tell, yes, that fellow and you both are now standing on the same platform. Now, paramateria, if I have to discuss, both are having a pari passu clause. Means no one is important, no one is less important now. Both are standing under the same footing. Now, Government of India says that I call you as a long term. I call you as what term? Long term. So, listen carefully. Problem is, long term, whenever they call, anything more than 12 months, anything more than 12 months is long term generally. When I use the word generally, that is important. Generally, more than 12 months is a long term. When it is buying and selling is involved, when buying and selling is easily possible, when you are doing that way, then I will tell 12 months is a long term period. Anything other beyond 12 months. Okay, because profits in a business will be made in 1 year. You are making equal amount of profit just like that by buying today and selling tomorrow. You are also making the same gain, but you are not waiting for 12 months now like a businessman. Okay, so lawmakers intention was very clear. You are making a short gain, or technically you are making a gain just in span of 2 to 3 months. Therefore, when profits are made by you in that way, and profits in business are also made in the 12 months period, then how that person will see? When a person making a business, I am doing a business for all round along for 12 months, then I am making a 10 lakh profit. This fellow is purchasing a property and selling a property in 4 months time, he is getting the same 10 lakh. Then why I have to do this business? I will stop. If everyone think like that, what will happen to the Indian economy? Business not there means employment will get destroyed. Hundreds of people, unemployment will get created. Government has all these things in mind, and they wanted to target on that short-term capital gains. Nothing should come in short period. If it comes, take the punishment. That's why short-term capital gain, when we discuss 111A, 112, I will tell you very clearly there, tax the punishment type. Short-term capital gains are taxed at higher rates. Long-term capital gains are taxed at lower rates. Why? For making the gain, you are holding the asset in patience, and that asset is growing over time, and then only you are selling. Na? So you are not going for that immediate gain. You are holding for at least 12 months or 14 months or 20 months, 1 year, 2 year, 3 years, like that. You are holding for more period. Na? Means wealth is concentrated in one person. Standard wealth is there. Government said that we are levying a 12.5% standard rate of tax on long-term capital gain. We will discuss. There are exceptions to this. Immediately don't put comment. Sir, long-term capital gains have. I know everything in this area. So listen. Example I am telling you. So short-term capital gains are taxed at higher regime. Long-term capital gains are taxed at a smaller regime, just to encourage more holding for more period. Clear? Short cutla, if you are making money, government wanted to put a long cutla tax. As simple as that. Therefore, what government has done, they divided capital assets into two categories. One, long term, next short term, or first short term, next long term. Okay. So, point is very clear. There are two words, long term, short term. Long term, short term. In this, short term capital asset they define. Long term capital asset they did not define. They actually said whichever is not short term capital asset automatically will fall under long term capital asset. Are you understanding? See here. First, let us read question 1. Why capital assets are divided into long term and short term? The tax incidence under the head capital gains, depending upon whether capital gain is short term or long term. Long term is generally taxable at a lower rate. Means short term is generally taxed at a higher rate. When I say generally, there are exceptions for everything. Okay. Second, summary of the concept. There are totally 4 concepts divided into 2 parts. Short term, long term. Short term, two things. Short term capital asset, short term capital gain. Long term, again 2. Long term capital asset, long term capital gain. Short term capital asset is defined under section 2, clause 42A. Short term capital gain is defined under section 2, clause 42B. Long term capital asset defined under section 2, clause 29AA. Long term capital gain defined under section 2, clause 29B. These are the 4 definitions. Remember the section numbers. Very popular questions asked in exam. So, this is the overall summary of the concept. Now, doubt number 1. 2 clause 29AA, 2 clause 29B. Okay, these are the 2 definitions. Long term. Short term, 242A, 242B. Question 1. Sir, long term capital gain definition is section 2 clause 29 AA. LTCG 2 clause 29B. This definition is coming first. This definition is coming next. This is coming first. This is coming next. Since this is coming first, actually they should have defined what is this and what is this, and should have told any gain other than long-term capital gain is a short-term capital gain. Any asset other than long-term capital asset is a short-term capital asset. Like that they should have defined. But they did not define like that. 2 clause 29 AL they said long-term capital asset means any capital asset other than short-term capital asset. Why? What could be the lawmaker's intention in doing like that? See, very clear. At Koushik's Pathshala, we always concentrate not on what it is. We concentrate on why it is. Clear, na? Actually, when this definition is coming first, you should have defined this and said, any asset other than long-term capital asset is a short-term capital asset. Like that you should have defined. But you did not define that way. You defined in a reverse way. You defined definition which is referred next, and you said in predecessor section that any asset, any capital asset other than short-term capital asset is a long-term. Why you should have said like that? What could be the reason? That's the question. For that also there is a logic. See, when I say long-term capital asset, what is long-term? What is long-term? How many years is a long-term? When I say long-term, it can run for hundreds of years also. Okay, it can run to 10 years, 20 years, 30, 40, like that it can run. How can you quantify the term for something which is perpetually running? Short term is something which has an end. Long term, there is no end. Long term means anything other than short term is a long term. Means 12 months is short term. Beyond that, for infinite years, it will go for long term. Therefore, I cannot put a quantifiable mark on this is called as long term. Therefore, what they said, long term runs perpetually. Long term runs perpetually. I can only tell where short term will stop. I can't tell where long term will start. Are you understanding? I repeat again. I can tell where short term can stop. Okay. I can't tell where long term will end. I can tell where short term can end. I can't tell where long term can end. Means when I say I know where short term can end means when you have an end, there is a beginning. There is a beginning. Short term means today you buy, sell within 7 months, 8 months, 9 months, 10 months, 11 months, 12 months. Beginning to end, this will be short term. For long term, there is only a beginning. Ending, non-quantifiable. Ending, non-quantifiable. When I say long term, term the beginning is known for long term. Ending we don't know. Anyone can sell it anytime. But short term is not like that. Anything within 12 months, there is a quantifiable period between 0 month to 12th month. Therefore, lawmaker defined what is short term. Where short term begin, where short term ends, there is a logic there. Where short term will begin, hold. Yesterday's session already we read, held by an SSC. The day on which you are holding it, the beginning period will start. The day on which a transfer is effective, that transfer happened, term completed. But long term, I can't quantify that way. There is only beginning for that. Ending is different for different people. Short term is common for everyone. 12 months is a quantifiable gap. Sometimes 24 months also given. So, is the logic behind why lawmaker defined what is short term. Short term ki beginning and ending is quantifiable. Long term ki beginning is quantifiable. And the beginning also what? Ending of short term is a long term beginning. Ending of short term is a long term beginning. There is no separate beginning for that. Clear? So you will purchase an asset, you will buy an asset, you will hold an asset. 12 months completed. From then the long term will begin. Long term can't begin from the beginning date itself, because long term means I can tell from the beginning date to 14 months is long term. Okay. But in that, for the first 12 months, it is short term only. So logic you have to understand very clearly. Long term starts where short term ends. Okay. Where short term ends. See, when I purchase an asset, long term holding may not be there, but short term holding 100% will be there. Sir, I did not understand. Sir, I will give an example. I acquired an asset today. I hold it for 4 days and sold. What will happen? In that case, short-term capital gains will get attracted. I purchased an asset and hold it for 14 months. What will happen? I crossed the short-term and went into long-term. Means in any transaction of a capital gain, short-term 100% will come. When you cross the border, it will turn long-term. Therefore, short-term is a guaranteed thing that will happen always. Therefore, lawmaker defined what is short-term. This is what I wanted to explain here. Hopefully, everyone understood the logic behind why short-term is defined but not the long-term. Okay? So that is what we wanted to discuss. Now, definition of what is a short-term capital asset. Section 2, clause 42A. See here. Section 2, clause 42A defined the term short-term capital asset. Everyone can open the Baer Act. Exact Baer Act, copy paste. Short-term capital asset means a capital asset. held by an assessee for not more than 24 months immediately preceding the date of transfer. If this is the date of transfer, go back. Okay, this period, holding period, this the day on which it was held first time, is the transfer date. Gap between them should be 24 months. Okay, then I call it as not more than 24. I will call it short term capital asset, not more than. Sir, you said 12, sir. Listen, don't get excited. Listen, it look like 24 now. Okay, let us also read the proviso now. Provided that in case of a security listed in a recognized stock exchange in India, okay, listed on a recognized stock exchange in India, or a unit of UTI, or a unit of equity oriented fund. Equity oriented fund, I will define that when we are reading section number 112. Okay, 112. But generally, you understand in a simple way. Equity oriented fund is a mutual fund where 90% of the fund amount is invested in equity shares. Okay, 10% they will give concession. 90% should be in equity share. There are 3 points in that I know. Okay, so section 112, there are 3 clauses. Those 3 I will explain when we come there. Generally, you understand first. Okay, next is zero coupon bond. The provisions of this clause shall have effect as if for the words 24 months, 12 months had been substituted. 12 months had been substituted. So if it is a 12 month, if it is the given specified things, specified capital assets like listed securities or unit trust of India, units, UTI, units of a UTI, or equity oriented units or zero coupon bonds. In these 4 cases, what are the 4? Listed security, units of UTI, units of equity oriented fund, zero coupon bonds. In these 4 cases, don't take 24 months, 12 months case short term period will be completed. If it is not more than 12 months, then I will call it a short term. Logic, let us understand. Logic, let us understand. See, observation is very simple here. Listed stocks are saleable easily. Listed stocks are saleable easily. You can buy today and sell tomorrow. Government of India's intention was very clear. If I purchase a share, you can't force an investor or a trader to hold it for more than 12 months. Every day prices are rising, coming down, rising, coming down. Okay. In that particular rush of blood movement, they will sell. What government said? Don't purchase shares on a gambling bet basis. You do that, but get ready for paying more taxes on that. Shortcut money, more tax will be levied. Hold it for more than 12 months. Okay, it is very difficult to hold shares for more than 12 months. Person like me, every 1 month I will shift all my holdings. You are asking me to hold for 12 months. Market so much circus is going on every day. How can a person not getting motivated to sell? Definitely they will sell. That's why what government said, if you hold a share, listed shares, that too. That's why unlisted shares are not there. Listed shares means what? Trading becomes very easy, very simple. Unlisted securities, procedure is very big. You have to go to section number 56 of Companies Act. There should be a transfer, there should be a transferee, there should be a share transfer deed, instrument of transfer in form number SH4 has to be executed between transferor and transferee, and within 60 days of execution of that instrument of transfer, you should deliver, either transferor or transferee should deliver the share transfer deed to the company for its registration. Company has to submit its refusal or acceptance within 30 days of receipt, or else he will go for appeal to tribunal. Like that, so much provisions are given under section 56 of Companies Act. 58 also, for that matter. From this, what you have to understand, logic is very simple. Unlisted securities sale becomes very difficult. And moreover, if it is a listed stock, market price is there. Unlisted stock, growth is not so easy like a listed share. That's why listed shares, listed debentures, listed preference shares, or any unit of UTI, or any zero coupon bond, any equity oriented fund. When I am using the word any, there is a meaning also for that any. I will discuss later. For all these, sale is always extremely easy. Extremely what? Easy. Therefore, people will tend to sell them lesser than within 12 months. Therefore, government said, in case of these kind of securities, marketable stocks, 12 months is the period. If you can hold more than 12 months, now you are a king. You will come under long-term period. Okay, sir, land and building, where it is, sir? Not there. It is there. You read the line number 1 properly. Short-term capital asset means a capital asset. A capital asset, land and building also will come. Held by an asset for not more than 24. If it is a land and building, plant and machinery, etc., for them, that 24 months period will apply. Understood? Okay. So definition over. What definition over? What is a short-term capital asset? We completed. Okay. That is not the end of the story. There are 16 different questions he can ask in exam. How many? 16 different kinds of questions institute can ask you on this particular definition. How many? 16. I have given all the 16. Listen. Short-term capital asset shall first qualify as a capital asset, because short-term capital asset means a capital asset. General purpose holding period with effect from 23/7/2024 का amendment made. Second amendment to the old Finance Act. They brought amendment and said that if the transfer happens, repeat carefully, if the transfer happens after, on or after 23rd of July 2024, then the period of holding should be not more than 24 months immediately preceding the date of transfer, to call something as a short-term period. Okay, but when the transfer should happen? On or after 23/7. Before that it is 36 months. Now it is changed. Now remove 36 months concept. Next, special case of holding period. Okay, see here. Security listed on any RSC, units of UTA, units of equity oriented funds, zero coupon bonds. Already we discussed that. Okay, with effect from the same date, the period of holding to make it short term, not more than 12 months immediately preceding the date of transfer. Okay, that point. Story just now started. I am putting it full screen. Read it. Read it properly. Take 2-3 minutes time. Spend time on that. You will get clarity. Complete during the lecture itself. Capital gains law, around 15 lectures will come. So slowly, one-on-one basis, you read. 8 marks to 10 marks, 100% you will gain. Read properly the definition. I have good questions to ask. Okay, I hope every one of you read this particular concept. So what you understand? Short-term capital asset means a capital asset held by an assessee for not more than 24 months immediately preceding the date of transfer. Normally, the holding period should be 24 months preceding the date of transfer, not more than. Then I call it as a short-term capital asset. In all other cases, we call it long-term capital asset. Correct. Specified assets, capital assets, listed security, units of mutual fund, or the units of UTI, and the units of equity oriented fund and zero coupon bonds. Instead of 24 months, replace it with 12 months. Concept clear. But that is not the way you should read. Okay. You should read on a broader basis with a broader analysis. I created 16 different situations that can get attracted. How many? 16. See the screen once. These many. After that, we will do one good illustration on that. Okay, I created one illustration. Okay, I took from the study material. Created means I did not create anything. Sorry, I have taken from study material. So, past exam question, yeah, whatever you call. Okay, on the basis of Finance Act 2025, I am going to answer this. Okay, applicable for May 26 exam. Since there is no amendment in this provision, those who are writing for Jan also safely can read this chapter. Capital gains, 3 amendments only are there, remaining as it is applicable for Jan and May exam, and even for the September 26 exams also. You are safe in safe hands. Okay, before that. But like this, you might not have seen before that much broader analysis on 16 different case scenarios on how to understand a short-term capital asset. Okay, see now. Tabular presentation, a broader analysis. Particulars. Transfer took place on or after 23/7, before 23/7, 2024. Forget about before. First see the on or after. See, they said listed security. Securities like equity shares, preference shares, okay, debentures, normal mutual fund units, everything will come. So, listed equity shares, listed preference shares, 12 months. Listed security, any listed debentures, 12 months. Debentures, bonds. Listed government securities, derivatives, etc. means so units of mutual funds, everything. Sir, units of mutual fund coming in proviso are the units of UTI only, not all. And units of equity oriented fund only, not all. So units can be even for REITs, real estate investment trust units, alternate investment fund units. So much concept is there. Those all will come under second, third category. So read again. Listed equity preference, listed debentures, bonds, other listed security, government security, derivatives, etc. Everything. 12 months, 12 months, 12 months. Now, they use the words in the section in the Bear Act. In the Bear Act, they use the words a unit of UTI. A unit of UTI. That's it. Which unit listed or unlisted? They did not tell. Therefore, listed units of UTI. Sorry. Listed units of UTI, unlisted units of UTI. But here only listed will come. That care you should take. So, listed unit of UTI, unlisted unit of UTI. 12 months, 12 months. Next. Unit of equity oriented fund. They did not tell which unit. Therefore, unit of equity oriented fund listed, unit of equity oriented fund unlisted. 12, 12. Next. Sir, here equity oriented fund they said. If it is a debt oriented fund, if 90% amount is invested in bonds and debentures, then in such case what you will do? Unit of equity oriented fund ki you said 12 months. If it is a debt oriented 12 or 24, it is 12 only if it is listed, because anyway in the listed security category debt oriented also will come. Unlisted debt oriented fund ki 24 months. So listed units of debt oriented fund 12 months, unlisted units of debt oriented fund 24. Previously both debt oriented funds ki 36, now one is 12, one is 24. Next, what they said, zero coupon bond, listed, unlisted, anything. Therefore, listed ZCB, unlisted ZCB, 12 months. Next. Sir, what about unlisted equity shares? 24. Unlisted debentures? 24. Unlisted government secured derivative, 24. Immovable properties, 24. Any other movable property like diamonds, etc., 24. Okay. See this table properly. See the table properly. A broader propositions of definition section 2 class 42. These are important. Exam questions also will come. Be careful. Okay. Done. Now let us go into an illustration. It is always incomplete without having one practical example. See. Let us decide whether these assets are long term or short term in nature. See, X purchases a house property. First, when it comes to house property, it is not in proviso, it is coming under original provision 24 months category. Okay. House property on March 10th, 2023. Transfers it on June 6th, 2024. You should always take June 6th and go back. Okay, June 6th and go back. Include also the date. The date of transfer also should be included. There is one case law happened in Supreme Court, Rasiklal Maniklal. I will show you the case law also. In the case of Supreme Court, a given judgment. Whenever we say within 24 months before the date of transfer date also should be included into that. Okay. Take calculator. Up to June 6th, we need to take starting from March 10th. Include also March 10th. Okay, take calculator. 31 days in March. March you forget first. First full months only you take. 23 April onwards you count. April, May, June, July, August, September, October, November, December, January, February, March. April, May. So totally how many months? 14 months totally. June 6 days. Plus March 10 days. Clear or not? So March, including March 10th, I'm very sorry. 14 months. April to next March 12 months. April, May 2 months. So totally 14 months. Plus June 6 days. Plus March 21 days or balance. Okay, how many days? 21 days. So totally 14 plus 6. 14 months plus 21 plus 6, 27 days. So 14 months, 27 days. It is less than 24 months short-term capital asset. Why? Purchase listed shares, 12 months category. In an Indian company on May 10th, 2023. On May 10th, 2023. Hey, see here once. They said listed security, listed on any stock exchange in India. Okay. So in that ADR, GDRs also will come. It should be listed on Indian exchange. That's all. So anyway, why? Purchases listed shares in an Indian company on May 10th. Transfers it on August 6th, 2024. So again count. May 10th, 2023 to August. May month you leave. Take from June month. Okay. June to next May, 12 months. June to next May, 12 months. Okay. After May till August means June, July, 2 months. So again 14 months. Plus August 6 days. Plus May 21. Same answer. 14 months and 27 days. But here it is a long term because it is a stock. Period of holding should be only 12 months. Need not be 24. Next. Z acquires units of equity oriented fund. Listed unlisted irrelevant. It is always 12 months. Purchased on August 7, 2023. Sold on August 10, 2024. 12 months crossed. That's it. It will be treated as long term. Next. A purchased diamonds, other movable property. It comes under 24 months category. Okay. A purchased diamonds on 12 September 2022. Gives the same to his friend B on December 31, 2022. B transfers asset on October 20, 2024. Good question, na? Read it properly. Read it properly. Okay. Read the question. Okay. See here. A purchased diamonds on September 12, 2022. Okay. Gifted the same to his friend B on December 31, 2022. Next. B transfers the asset on 2024 October 20. See, December 2022 means till 2024 December he should hold to complete the 24 months period. Since he is transferring on October 20, 2024, the period of holding is less than 24 months. Therefore, this will be treated as a short term. Like this, you should not think. See, I did not tell you one concept. That's why I'm not judging you. But one concept is there. section number 49(1), section number 49(1). Whenever any asset is acquired by gift or inheritance or will, whenever any asset is, capital asset, is acquired by gift, inheritance, will, etc. Okay, then in that case, what will happen is, you should consider the period of holding, not of your period of holding. You should take the period of holding of the previous owner also, not the previous owner also. Means what? You should not consider period of holding from 31 to 24. You should take from 22 to 24 September 12. Sir, what could be the reason? That's a good question that you have to ask me. Why they kept like that? Listen, there is another section called as section 2 class 47. There is another section called as section number 47 class 1. Okay, when you read section 2, clause 42 a along with section 49(1), read with section 2 class 47, read with section 47 class 1, class 2 and class 3, the overall impact of all these things is very simple. Transaction done is not a transfer. For the transferor, means what? For example, I gave gift to you. Okay. When I gave gift to you, I'm not getting anything in return. Na? There is no capital gain here. There is no capital gain. Anyway, capital gain will not come in a gift because I'm not getting anything in consideration in return. It's a gift. Therefore, what lawmaker said, gift there is no consideration, then full value of consideration or sale consideration of what you will write? You can't write anything. Therefore, if any capital asset is transferred by way of a gift, inheritance, will, etc., it will not be treated as a transfer. Listen carefully, it will not be treated as a transfer. Means what is happening here? Even though there is a transfer of asset from one person to another person, because it is a gift, because there is no consideration, they deemed that it is not a transfer. They deemed that it is not a transfer. Means an asset which is actually purchased on 12th September 2022, okay, is not subjected to capital gain when it is originally transferred as a gift. But that gifted asset is again getting transferred. Na? Then, since I did not levy any tax when it was transferred as a gift on 22, now I will consider that entire period of the holding for the previous owner also will be considered. That's why the period of holding to the transferor of the diamond, Mr. B, is not starting from 31st December 2022. It will start from 12th September only. That's what said in section 49(1). Therefore, the period of holding will be more than 24. It is also treated as long term. Next. C. Purchases unlisted shares in a company on November 21st, 2022. The company transferred shares in the name of C on January 5th, 2023. These shares are transferred by C on December 20, 2024. Read the question first. Exam these can come in MCQ. And second very important problem with this particular area is, like this they may not frame a question, but this can become one of the adjustment in a 6 marks question. So be careful when you are reading. Read the question. C purchases unlisted shares. Unlisted shares comes under 24-month category. In a company on November, now because of doing that 16 parts, it will become very easy. So easily you can now recognize unlisted shares comes under 24 months category. C purchases unlisted shares in a company on November 21st, 2022. The company transferred the shares in the name of C on Jan 5th, 2023. The shares were transferred by C on December 20, 2024. Now question is, the day on which a purchase should be taken or on which the company transfers in the name, register of members noted date, which date should be taken? Companies Act to become a member, transfer date is important. But for the capital gains purposes, a transfer date is not important. Na? Whether you are a member of a company or not a member, in Companies Act problem is, general meeting who will come and vote? Member. Okay. When you will be a member, if your name is entered into register of members upon transfer. Therefore, their date of transfer is important. Here we are doing income tax computation. Na? Here, what is the intention? Money is important. You started making your money on the shares which you purchased from 21st of November. Therefore, I will consider from the date only, and it has crossed 2 years time. This is also long term. That's why I have given one note also. In case of assets acquired by way of gift, etc., Section 49(1) will get attracted. Period of holding of previous owner shall also be considered. Okay. So with this, we completed short-term capital gain. Short-term capital gain. But listen, I did not discuss about period of holding in different 15 cases are there. How many? 15 different cases are there where period of holding will be given. Means whether in that period of holding previous owner period will be included or not included, like that some concepts will come. Those I am not discussing now. When I will discuss them, I will discuss when that situations independently when we read. Then I will discuss about it. Okay. That's why you can see explanation 1 below. See, so many points are there. Na? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. I said, na? 16, 17, 18. 18 points are there. In this 18, all are not applicable for your exam and all we are not going to discuss now. For example, I will give you an example here. See, shares held in liquidation. Shares held in liquidation. When we will read this particular explanation, when we are reading section 46. Distribution of assets in liquidation. At that time, we will read this point. Section 2, class 42, explanation A. Then only you will understand very well. So we will read section number 46. See here. Section number 46, subsection number 1, read with explanation 1. In that sub-explanation A to section number 2, class 42A. Then you will understand the real meaning. That's why. These are all concepts which we need to read independently. Means what? You should not read in this definition. Whenever occasion comes, we will link this there and then we will read. Full clarity, life we will never forget. That's why I am not writing here. Next. Now we completed definition of short-term capital asset. That's it. Remaining 2 minutes we will complete. Definition of short-term capital gain. Nothing to explain. That's why I have just put the BERAC directly. See. What is short-term capital gain? Short-term capital gain means capital gain arising from transfer of short-term capital asset. What is short-term capital asset? Just now we saw short-term capital asset definition. See, short-term capital asset means a capital asset held by an assessee for not more than 24 months immediately preceding the date of transfer, provided that exception is given. So, any gain, any capital gain arising from the transfer of short-term capital asset will be termed as short-term capital gain. Long-term capital asset means a capital asset which is not a short-term capital asset. Okay. So anything which is not a short-term capital asset will automatically become long-term capital asset. Reasoning I told you when we started itself. Life again you should not get a doubt. Why definition though 2 class 29 comes first, even then why 2 class 42 is defined, that doubt you should never get again. Next. Definition of long-term capital asset. Section 2 clause 29 AA. Long-term capital asset means a capital asset which is not a short-term capital asset. What is a long-term capital gain? Any capital gain arising from the transfer of a long-term capital asset is a long-term capital gain. Long-term capital gain means capital gain arising from transfer of long-term capital asset. Okay. Next. That's why below I have given the note also. Period of holding as provided in explanation. Full 16, 17 points are there now. To section 2 class 42A will be discussed at respective area. When we discuss liquidation related period of holding, we will read. Then you will have a clarity of thought process. Next. Next comes the area called as transfer concept. Which concept here? Transfer concept. Okay. Transfer concept, I have definition, the diagrams, everything I kept. But let us try to understand basically what is the concept of transfer. See, government is always having doubt on public, that public will cheat them in one or the other way. And second thing, always sale may not result in transfer. There are various other ways of transfer as well. If I tell sale is a transfer, they will do other things and get the money, but sale will not be recorded or registered there. That's why what they said, transfer. So capital gains chapter, we are not going to read sale. We are going to read the concept of transfer. Okay. Number one. I don't wanted to discuss transfer concept by merging with other concepts. I will discuss this as a separate video. I will cut the video now. Okay. Because I wanted all my students to experience the reality behind the concept of transfer. You should know the real meaning of transfer, different scenarios of transfer. Therefore, I will consider it as a separate lecture. Now, just let us read the Bare Act discussion. Let's read the Bare Act together. Transfer in relation to a capital asset includes sale, exchange, relinquishment of asset, etc. They have given. So many points were given. The first line is important. Transfer, okay. Transfer of what? Transfer in relation to capital asset includes these things. Okay. Sir, I did not understand, sir, what it is. I will give you an example. See here. There is a section in income tax. In that section, they said like this. The assessee should transfer all the documents, details, along with the profit and loss account or along with the statement of profit or loss. Assessee should transfer to assessing officer. There, what is a transfer? Transfer means sale, exchange, or transfer. Their normal grammatical meaning you have to give there. Means it has nothing to do with, I repeat again, it has nothing to do with sale, purchase, exchange, relinquishment, etc. There the word transfer is used in normal general context of transferring the documents from assessee to the assessing officer. Their transfer does not mean this definition. This definition is confined only in relation to a capital asset. There in relation to some document, evidences. That is different, this is different. So, transfer in relation to a capital asset. So, beginning itself is having a controversial discussion. Transfer in relation to a capital asset includes. When I use the word includes, my intention is only not these will come. Also these will come. Whenever section uses the word means, only those list will come. Includes, also these will come. Means even some things which are transfers, even if I do not tell here, if they have a character of getting transferred, that also will come under the definition. Transfer in relation to capital asset includes sale. That's it. This much definition, sale is one of the way of transfer. Sale is not the only transfer. Sale, exchange, relinquishment of an asset, or extinguishment of any rights thereon, compulsory acquisition thereof under any law, in case where the asset is converted by the owner thereof into or is treated by him as stock in trade of a business carried on by him, such conversion or treatment, maturity of or redemption of zero coupon bond, any transaction involving the allowing of possession of any immovable property to be taken or retained in part performance of a contract of nature referred to in section 53A of Transfer of Property Act, or any transaction, this I am not reading, any transaction which has effect of transferring or enabling the enjoyment of any immovable property. For the purposes of subclauses of 5 and 6, immovable property shall have the same meaning as given in section 269 UA class D. Explanation we can read later up to here, or technically up to here, sorry, up to here. See, as I said already, transfer I will cover separately. Lots of examples, lots of, see here, I have written so much of notes, diagrams for you to understand, how to understand each and every word. What do you mean by sale? What do you mean by exchange? What do you mean by relinquishment? What do you mean by extinguishment? Every word I have analyzed very clearly. I wanted to discuss transfer as a separate topic itself. Means what? A 2 hour, 2.5 hour session, I will separately put only on transfer next class. So in that I will discuss separately such that you will understand the significance of the term transfer. Okay. So just read the bare act. I'm cutting the lecture here. Next lecture, transfer will begin. Okay. In the transfer, I will discuss what is a transfer, what is not a transfer, exceptions to everything will come in place. Okay. Thank you.